Hey, Becky, Allie, welcome. Their third time, I think now.
Is it the third time?
I think so.
Man, I feel special.
So I'll have to put in the comments past ones. I don't need to get your resume or anything like that. We've gotten it before. We know you're well established in the mortgage industry.
And don't forget to say friggin' awesome.
Friggin' awesome. And can handle all states in the United States, right? At least 48 can take this one.
Yeah, we can definitely take them. So we are licensed in all 50 states. I'm personally licensed in 13 of those states. So the ones that I'm not personally licensed in, then I just facilitate to team members of mine that are equally as badass that can handle that kind of stuff.
All right. So we got all those out of the way. Let's talk. There's nothing specific that maybe I don't know. We all know like the market's hot. We all know it's possibly cooling down, those types of things. But you said, is there anything I want to hit on? I was like, well, maybe like one thing that I'm curious about even is it seems like it's harder to get a pre-approval right now. I feel like the credit scores have to be higher for conventional, maybe even for FHA. And I feel like if you are a legit self-employed, business owner, or if you're just the owner of the business, basically. So, depending on how you pay yourself, it's just harder than I feel like it's even been in the last 2 years. Is this wrong? Am I off or am I on? And either way, like what's up with that?
What's up with that? To be honest with you, I'm kind of surprised at what you're saying because I'm not seeing that, right? So as far as FHA, like I just closed someone that had a 580 FICO score, refinance and a purchase. So I personally am not seeing that kind of results where it's hard to get someone pre-approved. Now, the time it takes, the due diligence that you have to do upfront to make sure that you have a strong offer or a strong buyer to get to that pre-approval process, I think that is maybe taking longer if someone is, like less of a deserve or less worthy credit score, right? If they're on the lower side, the time it takes me to actually review that file takes a little bit longer, but the end result is still the same. I can pretty much identify right away if I'm be able to pre-approve someone, but I feel like maybe it might, what used to take me a day or two, it's taking me or maybe it took me like a couple hours. It might take me a day to do something like that. But as far as the actual, what files I'm converting, me personally, and again, so I am curious to hear why, what you've been seeing, because I don't feel that. I mean, I feel like we have loosened up some stuff as far as, because during COVID, for example, everything got real just strict, right? It was you either fit in this box or you don't. There was 3 extra verifications of employment that took place. There was just a lot of overlays. We went from having a 580 FICO for FHA to where they jacked it all the way up to a 620. And then last year, in the beginning of this year, they put a stack back down to a 600. And then now recently we can do back down to 580s again, but it's a case by case basis, right? You can't just, even if you have an approved eligible for someone, if they had recent lates in the last 12 months, if you're below a 600, they might not accept it. So those are things that I have to get underwritten ahead of time before I can issue a pre-approval letter. But that's, again, the 580 FICO scores, which those are going to be hard. But someone that's 600 or above, you should be able to get that pre-approved right away. And a lot of it, though, has to do with the lender, right? It has to do with their expertise. Are they bogged down? Are they just like, they have a 600 FICO score and they want to move on from that person because they don't want to take the time to get into the nooks and crannies of it to see like, okay, what do they need? Do they need a little bit more assets? Do we need to pay off a debt? Do we need to do those things like simultaneously? And if you're not working with a lender that's willing to identify those issues while you're moving this train, then you're going to probably not see those, you're not going to see those converted, if you're working with the wrong people.
Sure. Okay. So I guess one thing that I feel, and again, maybe number one, maybe it's already changed back. And number two, maybe it has been this way for longer than I feel like it has. And that's like a 700 FICO score needed for a conventional loan. I feel like wasn't that long ago that, 660, 680 was a reasonable score to get a conventional loan. I recently had a scenario a couple months ago where, for the heck of it, they just started throwing everything out there at this, to see if it would fly. Like, what if we put 50% down? What if we did all these other things? It didn't matter what we did, because the guy had a 686. He had to go FHA. And so I was one of those things where I'm like, is this right? Like, you need a 700? And so I talked to someone else, just kind of floating it out there, and they're like, yeah, in fact, I forget, Fannie or Freddie, they're actually trying to get us to get to 720. And I'm like, you gotta be kidding me right now. Like, I'm all in favor of reasonable credit scores. Like, I don't want everybody and their brother to be able to get pre-approved and buy a house. I want you to qualify. I don't want to relive 2006 through 10, but at the same time, you got a 686 and you've got income and you've got this and you've got that. I'm like, wow, it's a struggle to say that you must go FHA. So
okay, so to that point specifically, there was a moment in time, like I said, you're coming off this COVID, that Fannie, and you also had, I forget that guy's name, whoever was overseeing Fannie Mae was trying to, like, he had this like adverse fee. He's been kicked to the curb since then, but there was a moment in time where Fannie and Freddie, they, it's called DU findings, right? So as a lender, you run everything through the automated underwriter system. That's like the Wizard of Oz for us, right? Whether it's going to go or not go, or, we work it out that way, right? There was a moment, beginning of this year, that they kind of made it a little bit harder to get around what was like an easy, like, I'm going to do this and I know that I'm going to get an approval. It took me a little bit longer to find out what it was going to accept and not accept. So to that point, yes, a 670, a 680, there was a moment where it was borderline. You could go conventional or FHA, but most people were leaning towards FHA in those scenarios because it was easier. It was an automatic, I'm going to get this approved FHA, so here's your pre-approval letter. Whereas if they took 5 to 10 more minutes on that particular file with that 680, they would have found what it was willing to accept to get that approved. And funny that you're mentioning, now that we're on the topic, Fannie Mae actually just announced that they are going to be doing another desktop underwrite update, and it's actually going to be, making it easier for people to qualify. So what I'm saying is, right now, for someone to be conventional, the bare minimum you have to have is a 640. Now, 640, you have to have compensating factors. You might need a cosigner. You might have to put a little bit more money down, but you technically could get approved for conventional. Now, the rate is not going to be fantastic, but in a competitive situation, or if it was, let's just say, a condo, for example, that's not FHA approved, you would have to try to find a way to make conventional happen, right? So there's all these one-off situations, right? Everything's the same, but it's different for everyone. But effective, I think it's September 18th. Let me pull it up. They are going to now drop it down to a 620. So I literally just read it. So September 18th, Fannie desktop underwriting will enable single family lenders with permission for mortgage, blah, 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 that extra, mumbo jumbo. But pretty much it says, do you currently use credit scores to ensure compliance with the 620 minimum representative credit score requirement? So what they're basically saying is, it's going to open up those doors to allow more people to qualify for conventional. They're going to need compensating factors. For example, if they don't have a lot of credit out there, they're willing to accept, do you have rent? Do you have a Comcast bill? Do you have something that is not currently reporting on credit that we could show that you have credit worthiness, but maybe you just, don't have a lot of credit cards, for example. So there is light at the end of the tunnel to kind of touch on what you're experiencing, but a lot of it has to do with someone just taking the time to really get intimate with the file to find out what it's going to take to get it approved.
So like, this almost leads into like being salesy, but I mean, it's just, I guess, goes to prove why before you get started, you got to reconfirm with your expert in that area, right? So
yes,
it's
ever-changing.
Yeah, like, that I know more about mortgages than I should know, and it can be dangerous, and I have to actually bite my tongue a lot, right? Because that's not what I do. I'm not the mortgage guy, I'm the real estate guy. And with that being said, this is a good example of, and this is something that's happened with like the home prices. I'm talking about something that happened from a closing back in July which means the underwriting occurred in June. And, so we're taking things back just a few months, but already it's loosened. And if we had this conversation about 4 weeks from now, it would be a whole nother ball game, which means you always have to be in contact. It's why you have your own little, we call them drip campaigns, but they're, you are legitimately reaching out to let people know that there's some things that have changed. Maybe we can help if we couldn't before. And I think it's just a good example of that scenario. It's like, I'm sitting here thinking, oh, geez, this person, they pulled their own credit. And even from, what's that darn site?
What is it, like Quizzle, Credit Karma?
Yeah, it's like, Credit Karma, there you go. It's like, oh, well, the Credit Karma shows 3 scores and none of them are above 700, then I'm sure we're probably not going to be above 7. We're not going to be conventional. And that's not the truth, which is why I don't say those things and just say, hey, reach out to Becky, or, if they're working with someone they love and they refuse to work with someone else, then talk to that person and find out what the criteria are so that we know what we're doing. That's why you get the pre-approval before you start shopping. So
yeah, I mean, even to that point specifically, I mean, you even had that one particular client that they had an FHA approval, and I looked at it and I was like, no way. There's no there is no reason why these are not FHA buyers. These are totally conventional buyers. Now, did I have to get a little bit more like life coachy with them? Yes. But that's what we're here to do, right? We're here to help facilitate them. We do this professionally. And I know that everyone's not like me and, not like you, for example. Like, I do get very involved. I take it personally because I think there's not a bigger compliment for someone to be like, I want you to be a part of this major milestone in my life. They're never going to forget. You can do lots of things all the time, but no one is ever going to forget when they buy houses. I don't care if they bought them 10 times, one time, right? They're always going to remember every time they get a car, because it's not something you do every day, right? The fact that, we are entrusted with such an important process and task, it's fulfilling. It might be even selfish of me to even say that, because I find gratification in knowing that you and I are, getting someone to their goals, right? Like, I had a client where their password for their bank account was own a new home 21, right? And it was like she was having a hard time. So I'm on the phone, FaceTime with her, trying to help her like navigate how to get, the things that she wants. And, I heard her talking out loud and we were joking about it, but these are what, this is a major thing for everyone. And you can't take it nothing but wholeheartedly when you're doing this for everyone, because we do this every day and maybe we take it for granted, but they don't. And it's important for me anyway. I try to just always remember that this is everything to them. Everything. And it might be just your 10th transaction for the month, but this is literally life and death as far as they're concerned in some situations.
Yeah. Well, and that's that's kind of the industry issue as far as I'm concerned, is there's somewhere around 1.2 million realtors right now. And that means that there's going to be some bad ones and some great ones and some decent ones and all that stuff. But it's like the whole industry starts to get a bad name if even the bottom 5% are the ones ruining it, because that's actually a big number, right? I mean, 5% of a million is 50,000. No, I'm sorry. It's 500,000. No, hold on. 5%. Yeah. 50,000. And, so we're talking about if 5% of 1.2 million are bad agents, we're like, what, 60,000 bad agents out there. And that's a lot of bad agents, And so the same thing from like, I'm sure there's even more in the mortgage industry, because it's very rare to walk into a real estate office and have call centers. But this occurs in the mortgage industry, where one building might house 3,000 people that are on headsets, right?
Yes. So, oh God, yeah.
So, and it's not that there's anything wrong with them. It's just that it's the same math, or the same problem. There's 3,000 of them. They're not all equally trained. They're not all equally invested. Some of them are literally dialers, and others are mortgage bankers. And for those that are mortgage bankers, thank you, right? And for those that are dialers, please leave, because it's like, it's just not good, right? And that's why it's important when you're working with somebody, if they're not doing a good job, that you fire them. Like, people
Yeah.
should be investing what you just said. That's your job. That's why you get paid. You know, I always laugh if somebody just recently, they said, well, we could go at this time, or I guess we could go on Sunday if that's a thing. And I'm like, yeah, seeing
It's a
houses
thing.
on Sunday is a thing.
It's a thing.
At Christmas Eve, Easter Sunday, like, you let me know and we'll make it happen somehow, like,
Right. Yeah.
and so it's just funny. And while I appreciate that they're respectful of the time, right? They're looking at it saying, well, I know he has a family, he has a wife, he has 2 kids, he has a dog. I know that he doesn't spend all his hours in real estate, and that is absolutely true. But so I appreciate that, but it's always funny when they ask, like, can I call you like after 5, or can we see houses in the evening? I'm like, yeah, we can.
For sure. I mean, I feel like it's a new thing where, like, I feel like more of our clientele are a little bit more aware of the fact that there were no boundaries for a long time. So I feel like people are trying to be cognizant of that. But to your point, like, and I'll get that same response, and I'll say, listen, if there's one thing that you need to know about me, is that I'm always available. If you need me, you call me, because that is what our job is supposed to be, right? Within reason, like, if it's midnight, if I'm up, I will respond to you. Or if I'm not up, you're going to be hearing from me in the morning. But to that point, yes, it is a thing. And do we appreciate those of you out there that like, hey, I want to know, do you work past 5? Well, yes, of course, because we have to be working when you are not, right? Because
Right.
that's, like, you are giving up your weekends because we have to be available when they are not. And God, Lord knows I don't have time for anything personal. Jesus Christ. Like, I don't got no time. So, I mean, I understand that when someone's calling me at 8 o'clock at night, it's because they just got back from softball, kids, this, that, and the other thing. And I have to take that phone call because that is their minute that they're able to focus on me. So that way we can achieve their goals.
So this is, I think, a good segue. We've talked about this before, so let's get real vulnerable. You're going
Okay.
to have a honeymoon coming up in a
Okay.
handful of months. You're welcome to put it all out there. I'll just leave it at that.
Okay.
And you will be in a very different time zone, and you are going to be with your newly married partner, and you're going to need to focus on your relationship, right? Your spouse, your honeymoon, you, unbelievably you.
Yes.
Have you thought more about how you're going to do such a thing?
Okay. Yes. So Joe, okay. So anyone that's listening to this, Joe knows exactly, like, the kind of person I am, and anyone that knows me, like, my work ethic is to my own detriment, right? So, like, that's no secret. So yes, I am very nervous about, and we've spoke on this about, I finding that work-life balance, right? And COVID allowed me to have that. You're forced to work from home. So now, instead of me driving an hour, I'm able to crawl up the stairs and I'm immediately with my family, right? But then it also has it's a double-edged sword, because then you don't have that, like, that decompression time, right? Because mortgages can be very emotional, right? So I'm always dealing with people's emotions, right? It brings out, everything. You see the good, the bad, the ugly, right? They're crying on the phone with you. And then, if you're having a bad day in your own house, you have to shut that off and be a professional, because you have almost strangers' emotions that you're, juggling, and, just giving them that confidence. So going on. So yes, I'm getting married. There's a lot of things happening. It's at that, we're at 4 months out. You got showers, bachelorette parties next weekend. And all of my days is centered around prepping for those 1 or 2 days that I'm not going to be immediately accessible. Right. So now you're talking about a honeymoon that I owe it to myself. I owe it to my spouse to go and give her all of that attention that she's going to need. And I also probably need it. And I have a plan in place, yes. And I will be probably working at 2 a.m, hitting up some emails. But I have a good team and a good support team behind me, where they all know that I need a minute. And so yes, I think I have a good plan in place to get me through it, but it is going to be very hard for me to turn it off, because that's a side of me that I don't know how to turn off, Joe. Like, if I'm just being so candid with you, I don't know how to be any other way than just on all the time. You know, I'll chill on the weekends, you know, like where, you know, Monday through Friday, I'm a workhorse, right? And on Saturdays and Sundays, am I still available for pre-approvals? Yes, but my intensity level gets to get turned down on the weekends, whereas yours turns up, right? And if I'm needed specifically, you know, I'm right there, but I don't have to be like in the business as much on the weekends, right? So I live for my Saturdays and my Sundays and my Friday nights, because I get to like really kind of just be a little bit more chill. I can do this on the computer, but I don't have to be like a crazy cat, you know, that mean. So I know that I'm going to have to work during that time. I just have to trust that my team will pick up in those moments where I'm not fully accessible. So that way my referral partners, the people that trust me with their livelihood and their biggest goals, know that it's just going to be business as usual. And I didn't just float off into the deep abyss and I'm never returning.
Yeah. Well, so you answered that in an interesting way. And, you know, one of the things that I try to, like, when I talk to non-industry folks, I really like to talk a lot about like their business and understanding why and how and all these things, right? And so the way I kind of look at it is, I know, and your other referral partners, vendors, you know, everybody, they all will know, if they don't already, that will be taken care of, because you do have a team. You don't operate just you. You have other people around you. You've had that. You've ramped up a little bit more and things like that. So that's the easy part. You are the hard part, right? It's the you that is going to make it difficult or easy or whatever the case is. And I think we talked about this too, like maybe it'll be a good time for you to slowly transition out of this idea of how long you do have to work each day, you know, or maybe you'll want to hire another person and give up some of your income, because now you're ready for a different balance. You know, I mean, those are things that you'll have to just kind of figure out. We're all figuring them out. No one, I think, has mastered it. I don't care, you know, how rich or poor the business owner or business person is, you know, like there's always that tough, you know, balance and always other things that we might be wanting to do, you know, but at the end of the day, you know, we find them, we find ways and things like that. Long trips are definitely difficult in our industry. Short or long weekends, I should say, is not too bad. Hey, I'm heading out to Vegas Thursday night. I'll be back Sunday night. You know, call me, text me, but you know, I'll get you showings with so-and-so. They're helping me out. But if I was going to be gone for 10 days, it's tough. And while we don't have a down market, you know, on the real estate side in Michigan, it's a little slower in the coldest months. And so, you know, we do our week-long vacation, normally January, February, kind of works out okay, you know. Although we do always joke too, like if you want to get busy, take a vacation.
Oh my God, there's nothing more truer than that statement whatsoever. And even like, so like I'm a Thursday, Friday queen, right? I will do like a Thursday, Friday, you know, because you can like float around and like no one really knows you're out, like because I try to present myself in a way that no one knows when I'm out of town, because like you said, as soon as someone even sniffs that you might not be accessible, they want to call just to know if you're going to answer, right? This is how it goes, right? They just want to know that you're there, and because sometimes they just want to hear my voice. They just want to talk to you, right? You could have all the people in the world, but they're not you. As much as you train them to be, they're not going to speak the way you do. They're not going to handle it the way that you do. And sometimes it's just, you know, hearing your voice because they know that you're amazing, right? And you can have that person step in, but at the end of the day, your person wants to work with you. And I respect that, right? It's flattering. Thank you. Right. But yes, I do get stressed out, and everyone knows I get stressed out when I do take those longer vacations. So, but I am at that point in my life where you're right. You know, you think about like the long shot, I would be a fool to think that I can function at this capacity for the next 15 years. Right. I know that, like, you know, there's not very many older, really good loan officers, right? Because it is a very draining, like there's a lot happening all the time, right? And if you think, you know, like they're not really, you don't see like a 70-year-old loan officer running around or like a 6-year-old loan officer running around, but you can see a little bit of an older real estate agent, because a real estate agent, you can control what you have coming in, right? Versus a well sustained loan officer, it's coming no matter what, right? And you have to learn how to, to navigate that. I mean, so, so obviously I have to surround myself with strong individuals. I have to surround myself with people that I trust. But my retirement plan, do I plan on knocking this stuff out for the next 15 years? Of course, yes. But my long-term plan, I mean, I will have to make some adjustments in my life eventually, but as of right now, it's freaking, let's go back to like the flux capacitor. We're freaking going back to the future, forward, backwards. I'm going to do it all for as long as I can.
Yeah. Well, and the thing is too, like, there is also something to a certain prime in your career, that, you've gotten to a certain point where the cylinders are all firing and you're just doing more or harder because you're so good at it at this point, an executive level, for example, if I'm an executive at, any of the Fortune 500 companies, odds are you're probably between 45 and 55 years old, the exclusion, of course, being the tech companies, but all the other companies are probably somewhere in there because you've probably been in the industry now for 10 to 20 years. You're really hitting your stride. You're young enough to have the energy and the knowledge, like the newer, information. You're experienced or old enough to, know what's going on too and be able to handle your business. So, I think that there is something to that. And you've been doing this forever. Like no one ever believes your age, because
I was very young. October is going to be, I think, 18 years.
Yeah. And, so, I won't put you out there, but obviously if someone's looking and goes, okay, 18 years. And so she has to, that's like, it doesn't all add up, right? Like your appearance and your years in the industry doesn't seem like 18 is possible because the assumption is going to be, well, she must have been doing something else first. And that's really not the case. But, in any case, I'm just saying there's a stride that you hit and it's like, you do have to be all systems go. You do have to be firing because that's your time. And like when that time kind of comes to its end, it's not because you're not working anymore. It's because like you now have people that maybe in our industry, I think it's more, we have people that are surrounded by us or we've surrounded with that we can help grow their business now. And some of that's going to be your client base, right? Because now your base is so much bigger. And, I guess the nice thing with what I do is I can always refer to another agent and get a referral fee. And, if it's a big sale or whatever, that referral fee can be a pretty decent paycheck, even though it's only 20 to 30% of whatever the commission is, and that's one way for us to slow down. I don't know if you have that in the mortgage side, but I'm sure as times, go on, you'll be able to figure it all out. But, it's definitely something to be said about going hard and something to be said about slowing down.
Yeah. I mean, one thing for me is, just in life in general, I mean, not even professionally, but even personally, like I don't want to be complacent. I don't ever want to be the person that does just enough. And I've never been that way. And not everyone is like that, right? I feel like there's certain things that you can teach and there's certain things that you can't. Like like you can have a fire inside you that you can't teach someone to feel that sense of urgency, that go-getter mentality. Some people are cool with like doing one or two transactions and that's good for them. I mean, even in life, I'm just not that person. And I don't care how big I get. Also, let's just say you can have someone that's let's just say like anyone that is the highest of the high in like what you're talking about in the executive world, right? Let's just say you've reached that pinnacle. I'm never going to be so big or anything of that nature where I'm not going to take the time and go to someone's house and pick up documents. Like who the hell would I be to be like, no, I'm too good for that. Like, okay, because that's the minute that I would have to like reevaluate myself and my life. Right. So, and anyone that I want to take under my wing, I want them to have that same mentality because you're never too good for anything and you're never going to be too good for anybody. And the minute that you think you are, then you're going to get knocked right back down to reality because that's just how life is. And I don't like to take things for granted. And I don't like to, I don't know, maybe it's modesty, I don't know, but I try to just be who I want to be and project that same energy back from other people. But I'm never going to be, there's a difference between being confident and arrogant, right? And there's a lot of arrogance out there, unfortunately. But in our business, you have to have a sense of confidence, and you get that by doing it for a certain period of time. But at the same time, you can't be arrogant about it, because there's no time. Like, why are you going to be arrogant and think that you are too good to go and show someone a house at 6 o'clock at night on a Sunday, right?
Yep.
You would never do that part, like, or, oh no, that's not me, I'm going to refer you to my person over here. No, because you're not like that, right? And that's what sets you apart from everybody else, right? And I would hope that that would set me apart from, everyone else as well, right? For example, I should be so lucky that every real estate agent in the whole entire US of A wants to only work with me, right? I'm not arrogant enough to think that that would be a reality, nor would you think that you could be the only agent out there, right? But at the same time, the ones that do get a chance to work with me, I hope that I make a lasting impression, not only personally, but professionally, where they know that their people are safe with me, and I'm going to do whatever we have to do to get them into that house, because it's everything for them. And I'm not going to take that, lightly. And I appreciate, you to that aspect, because you are the same way. But you are a very well-rounded person, as far as, like you said, a little bit more about the mortgage side than you probably should, but you also are very good at staying in your lane, right?
Mm-hmm.
You're not sabotage and bring up a first-time home buyer program and like push that as your skill, when darn well that this person is either going to fit in that box or you don't. But you have a lot of agents that don't have that confidence, and they use that as, I'm going to get my foot in the door. But then it puts me in a position, because then they're going around searching for someone that's going to get them into this first time homebuyer program that they're never going to get into, because they don't qualify for it and they don't want to hear that. So they're searching for someone that's going to tell them what they want to hear. Just kind of, it's like never ending.
Yeah. Well, and it kind of comes now full circle to where we started with my belief in that it's harder to get qualified. Although I do want to go back on that on something else. But, when people ask me questions like that, like what credit score do I need? Well, I don't know, probably above a 580, but why don't you call, this person? What do I need to do? I know what we've always needed, but those might have changed. Are there any first-time homebuyer programs? There might be. Like, they come and they go. Sometimes a first-time homebuyer program is only that we only require 3% down on conventional, even though normally you want 5%. Sometimes first-time homebuyer programs are the state's offering $15,000. Like, they're all over the place. Don't ask me to keep up with them, because
they're like, I want sharks with freaking laser beams on their heads too.
Exactly. So, but coming back to that, one thing that I hit on, and I'm curious now, your take on stated income or self-employed, or whatever the right terminology is. They're also, I feel like, maybe not harder, but they're taking longer to qualify. Like, it's not just as simple as the tax returns. And in fact, on the Hardcore Mortgage Show, which you guys do every week, and on podcast version on Wednesdays, and on the radio on Saturdays, and I was on it a couple weeks ago, and you guys took a call from a self-employed gentleman, and he's like, my income on paper is like 30 grand, and it's like, well, really, you're not going to qualify for a big payment once we do your debt to income ratio, even with no other debt. That's not a big mortgage payment, right? So, like, I feel like, and again, maybe this is just interpretation or whatever, that before you could kind of like back some numbers back in, right? You could take a tax return and be like, well, they wrote off their car, so let's, we can add that debt, but it's actually okay because their car payment, with the gas and the depreciation, also their crap, it actually took away 18 grand out of their income. So now this $30,000 guy has 48,000, but now you got to count his debt. Car payment was $500, so he's back, down, 6 grand. So we're still up, right? We're still up, and like, we just keep doing these things. And I feel like there's less of that. So again, am I right? Am I wrong? And I know they're case by case, but as a general rule of thumb, what's your take?
okay, so self-employed borrowers, yes, you do have to get a little bit more involved with them. So prior to COVID, so COVID changed everything. It changed everything about life and also mortgages to some aspect, right? So before you're self-employed, you would be considered self-employed because you're not a W-2 employee, right?
Right.
So you would go off of whatever your Schedule C is, okay? Prior to COVID, I could look at someone's 19 and 20 tax returns, okay? Look at their Schedule C and do my thing, and that would be the end of it, right? And I would be like, look, you qualify, no, you don't, or you can actually still do this. Sometimes you don't have to take a 2-year average. Sometimes you can, if someone's credit is qualifying for them and you knocked it out of the park in 2020, I can just use your 2020 tax returns if you're going conventional. FHA, you have to take 2 years. So everything is, it's a long, I'm trying to keep it a short-winded one because there's just a lot happening with self-employed, but it used to be now. So now what I have to do, not only do I have to prove the income, but now I have to get 3 months of bank statements to show that that income that they showed in 2020 is also, you know, it's the same in 2021. I have to show that the business is active, because what they found was we're taking these tax returns and then these people weren't even working in 2020, right? They weren't even working, right? So you get these bank statements and they're like, okay, well, if someone that's a W-2 employee has to prove that they're still working, how can you prove that a self-employed person is working? So now we have to get these bank statements. So that's what takes longer, is you have to only get the tax returns, but then you also have to see the bank statements. So that way I can see, okay, I'm showing that they made 30,000, or let's say it's $2,000 a month. I have to show that in their bank statements, I can prove that they're still making approximately $2,000 a month after their expenses and things like that. As far as debts, right, where you can push and pull things, depreciation and depletion, you can add that back to someone's income. So for example, you have a $30,000 income, but let's just say they wrote $15,000 in depreciation. That $15,000 can get added to their bottom line. So now they go from a 30 to a 45,000 income, right? So but it's knowing that, it's knowing what you're looking for. And that's if someone's a Schedule C, then you get into like corporate and 1120S's. There's all these things, K1s, you know, so there's a lot more documentation that comes involved with self-employed buyers. And that's why it takes a little bit longer, because you can't just slap a pre-approval out there and someone gets an offer and then all of a sudden you want to work backwards and then you find out that they don't qualify. So you do have to take more time. So in the beginning, when I was mentioning it takes longer to do a pre-approval, that's why, because you have to really, if you're trying to give someone a piece of paper that is worth the words that are printed on that, if you're not taking your time up front to identify issues, you're doing yourself a disservice. I'll give you a specific example. This is even a self-employed person. This is, he was out of work 2 years, okay, and he was drawing a disability, okay? So 18, 19, 20, half of 21, he was Social Security disability, okay? He couldn't sustain life, qualify for anything with just a Social Security, right? So you have these different guidelines that are called return to workforce, right? So he just started a job in 2021, okay? And I had to prove, right, that, you know, because the biggest thing when you're looking at underwriting is the likelihood of this is going to continue, right? If it was commission, they'd tell me to kick rocks, right? But he had a W-2, 40-hour work week, and it got to underwriting, and I did all my due diligence in the front, because I was like, I'm not going to have this guy put offers in if I don't feel confident that where he's working is going to be sustained, okay? So we get this offer, everything's good, I feel confident, he gets an offer, he gets accepted, we're moving forward. Well, okay, so he's just started a job in April, this person. Well, during this time, he's only been to work, so we're in August, so that's 4 months, okay? He was off for a month in between there because he got COVID, right? So now, and I didn't know that, right? So we do one verification and the guy's working, great. We do our second one because now you have to do multiple throughout the process because of COVID, right? We get the second one and it comes back, he's on a leave. And I was like, so I gotta get on the phone. Hey, what's up? I got COVID. I'm like, you got to, and I was like, okay, you got to tell me this stuff. So now my back's against the wall because I have to prove that this guy, you know, this person has income that's going to continue and he doesn't qualify for just a Social Security. I have to use this job. And so I have to now say, okay, now it's wishy-washy because you've only been at work for 4 months. And really it's 3 now because you're off for a month, right? So there's all these things that are constantly moving that no one sees behind the scenes, right? So now I have to put this whole thing together. I have to get it, like we got to pull in doctors. You got to do all this stuff right behind the scenes to just really just paint this picture that this person is going to be, has stability in their income. And you got to do all these things right behind the scenes that nobody sees what you do, nor would you ever get credit for it because you don't speak of it. Right. So you're not be like, hey, well, you're welcome because I did this for you. Like, because they don't care. They just want what they want. Right. So you got to get the letters, you got to put together, and it had going for exception. And we got it approved. So everything is circumstantial. You can have conflict, you can have problems, but if you're with the right people that can see the issues, identify them ahead of time, then whether they're self-employed, they're on a fixed income, they just became, they're a newly divorcee, they're just now returning back to work for the last 2-3 years, right? As long as you have someone that is on your side, that is progressive and can see these issues ahead of time, you're not going to have an issue. But that goes to the point where sometimes these pre-approvals do take time in the beginning, because I'm a big advocate on, I'd rather do all my work up front, and then this person finds a house and it is smooth sailing, versus us getting it, dealing with it as we're dealing, as we're going through it, because that's a disservice to them, to you, and their whole entire experience of buying a house.
Yeah. Well, like, fake it till you make it is a saying that people say, but it's not a reality. Like, it shouldn't be, and part of faking it till you make it is also like, well, we'll figure it out. Now, there are instances, right? Again, just like anything else, I can give you things that we'll just figure it out. Like, we're doing an inspection and the, GFCI wouldn't pop. Well, we'll figure it out, and this isn't going to hold us up from buying the house, and I'm not going to let it make the deal fall apart. On the other hand, we walk in and we need a structural engineer to come, and that's not, we'll figure it out. That's like, we got to get a structural engineer here.
Right.
And yeah, I mean, doing all the upfront work, and then of course being honest. You made me think, do you get, because I actually did mortgages for a short period of time in
I would have never guessed.
in the 2005, 2006 era. So like when you were getting started, I suppose. And also I was getting started. I just didn't stick with it. And anyways, I remember like the business owners always being afraid to give us their info. It's like they thought we were going to call the IRS and say like, hey, I think that Becky might be like scamming you here. Like, I don't know why, but they were always just worried. Is that something you still see? I mean, I think people in general are always like, why do they need this? But we hand it over, right? Like, in all honesty, like everyone talks about sheeple. That's a new word, right? And I feel like if anytime people
listen, I've been saying sheeple for like my whole entire life. Like, okay. So I'm glad everyone's getting on the bandwagon, but yeah, sheeple are very much real.
I feel like that's definitely the case in the mortgage industry, because you're like, well, I need all these things, and I'm like, okay, well, here you go. Yeah, so right. It is definitely the time we just do whatever they say. But do you get resistance, especially from the business owners, when you need tax returns and bank statements and maybe business bank statements, and because you need all this verification? Do you get a lot of pushback on that, or people understand?
It depends. I mean, it's all about, how you do it, right? I'm in the process of teaching someone. It's all about a finesse, right? So if you're nickeling and diming someone for a piece of paper every day, of course, they're going to be annoyed with you, right? So the purpose is not to like, today I need this and tomorrow I need that and whatever, right? So if you kind of just set the tone, you won't get any resistance, right? But there are some things like where I see more resistance is for the person that's giving someone a gift, and we have to document the money coming out of their account. They want to like deduct things out of the, like they want to strike this and strike that. And it's like, no, you can't alter these documents. Unfortunately, we have to see it. You're involved now, but this is how I can limit what I can see of yours. I have more pushback on that.
Yeah. Well, I'm going to cut you off. That kind of makes sense, right? Like, I give you guys $10,000. Now your lender needs proof of where the 10,000 came from, and you say, well, here, it came from Joe Muck. And then you call me up and say, well, I need proof of where you had $10,000. And I'm like, it's none of your business, right? Like, you and me, we don't have any business together. I gave that money to Becky and not to you, Mr. or Mrs. Lender, and so I could see that. And then especially, God knows, like, if you looked at my bank statements in February, you'd have been like, how much are you gambling? And the answer would be not that much, like literally
Right, yeah.
$200. But you would have seen all this like in and out because there was all these promos going on. And if you put $20 into BetMGM, you got $100. So I put 20 bucks here and 50 bucks there and 20 bucks, you know.
Yeah.
So yeah, I don't want someone to see that. I wouldn't want someone to, you know, think like this guy's some degenerate, you know.
Right.
And I'm sure there's all kinds of interesting things on some bank statements. And so, yeah.
I mean, honestly, I don't look at that stuff. My eyes go on what I need to see. I mean, some people probably do look at all the details. I personally don't, but I try to explain, like, we are the majority investor of someone's house. Like, so someone's buying a house for 3% down. That means we are the 97% investor of your home, right? So we have a right to make sure that you qualify for these things. And, you know, I feel like you're setting the tone up front. So it's, you know, you'll have some people that get a little sensitive when they're like, well, why do you need a profit and loss? Or why do you need a balance sheet? You know, like after a certain point, they'll get a little bit pushy, but that's if they feel like if you nickel and dime them for something every day, something different. Okay. Someone's naturally going to get irritated by that. Right. But for sure, bank statements from donors are always an issue, because even if, like, I just had a gentleman, he gave this, you know, a kid a gift. He hit the birth lottery. You know, his parents are giving him, you know, a lot of money for the house, which is great, good for him. But the parents also took it out of their 401k, and so now I'm looking at a bank statement that's got a large deposit. Well, now I have to get intimate into their things, because the reality is we have to make sure that there's no funding of weapons of mass destruction, right? The Patriot Act is what allows us to question these things, because we have to make sure that everything's on the up and up and can be documented, because that's just what we have to do now, because, you know, everything happened and changed, you know, history and all that stuff. So, so I feel like, yes, there's pushback, but a lot of it is emotional responses. And once you actually get to them to understand, like, listen, I don't want this. I don't want to even ask you for it, but it is what it is. And then once they get the emotion removed, then we can move past it. But there definitely is emotions involved with mortgages, as you know. So
Yeah, absolutely.
anything with money is emotion.
Do you have time to go down a rabbit trail?
Oh, I'm always down for rabbit holes, all that.
All right,
stuff.
here we go. So medical or medicinal or recreational marijuana is legal in like 38 states. So again, sometimes it's medicinal only. Michigan, obviously, we have recreational rules now. California, a lot of states, right? So, however, because it's not federally legal, they have issues depositing money, things like that. If I am in that business, and for the record, I'm not, and for the record, I wish I was. So
you can make money in that for sure.
There's a lot of money, and there's even more money for those that got in early and what have you, right? So if I'm in that business and I'm depositing some amount of cash regularly, so it is definitely cash, non-traceable really, can I get a mortgage?
So that is going to be contingent on your lender's stance on it, right? So 6 months ago, we still were not recognizing that as bona fide income, you know, because we are a national lender. So we run into that. It's not a federal thing. It's state by state. So how can you say, because we can't show discrimination, right? So how are you going to say that this person over here in Michigan can use cash for that, but this person over here that's doing it on the side, there was no way to navigate that, right? Because it wasn't across the board, and we have to be, you know, for Dodd-Frank and all those other compliance reasons, we have to be like, even what is good for all, it has to be the same. So 6 months ago, it was a big fat no because of that specific reason. I know that it is being evaluated, and we have, I believe it's a case-by-case basis. So I want to watch what I say there. Sure. But the big thing is the whole like good for all kind of thing. So if it's cash and someone is self-employed, let's say just self-employed, yes, because there's a history of cash deposits because of their self-employment, right? But we have to document what that self-employment is, right? So if it is from, you know, marijuana, and you have like a, whatever they're called, I mean, I don't know what they're called, but they're called something, you know, like the hubs, wherever you get it. Like, I don't know what they're called, but
I don't know. Drug dealers? No.
I don't know, like the house, like, so if you're the person that's growing in the house and you're selling it to wherever people go to get it, right?
Yeah. Okay.
You know, so you have like the middle people. it's still very taboo. And, like, I don't know how else to say it. Like, it is very taboo because it is legal, but it's also not accepted 100% like it should be as far as like, professional employment.
Sure.
Because of,
Yep. So somewhat safe to say, if it's not FDIC approved, it's probably not going to fly.
yes. I mean, so I guess the long and short of it would be they are taking steps, they are reviewing it. So they're not saying like we're discriminated against you because that is your livelihood, but there are things that are beyond my pay grade that would allow people to say like, okay, well, we're not just there yet because of all these other things that go on behind the scenes that, I'm not privy to, right? So
Yeah.
I have to follow the rules. I don't get to make the rules. So I just know that we are a company that is progressive, and we make business decisions, and it's not like black, white, there is a shade of gray that we can be like, okay, I see what you're saying. And I see where you're going with this, and we can make decisions, together as a whole, as long as it makes sense and the person is qualified. So with that, I do think that we will see some changes, specific to that, but it's still, it's a little bit tricky still.
Yeah. I just figured there are some, that because of the nature of the business, they can't put money into the bank, and then they don't put like anything in. But there's also some that, they have legit tax returns and they have a legit business name, and I'm looking at it thinking, well, if they have those things, why can't we at least use that? And this is where I personally hope rules change. I understand it's never going to be acceptable to use actual cash. And I understand it's not, acceptable if we can't trace it, because we want to make sure that we're selling legal marijuana and not illegal heroin or things like that.
Right. Yes.
So I'm cool with all that. But I feel like if I have a marijuana shop, or I'm a marijuana grower, and I'm in a state that is completely legal to do, and I have my business licenses and I'm paying taxes, like Uncle Sam's getting his money, I should be able to get my house. Like, that's the way I look at it.
Yeah. No, I don't disagree with you. I don't disagree with you at all.
Like I said, you didn't make the rules. This is my own thought process. Like,
yeah.
So if we ever start a lending institution together, then I guess we're on the same page.
Yes, we can pencil that in as a TBD to work. Let's work on this side over here.
Yeah, I mean, starting in a financial institution is probably pretty easy to do. So we'll get working on that.
Yeah, you can start it. It's just all the stuff that comes after the fact that is like, you got the boot could not be bigger that's on the lender's neck, right?
Mm-hmm.
Because of all the bad things that happen in the future. I mean, so from like licensing to disclosures to things that have to be in a timely manner. And if you don't do this, then this person is eligible for a free loan. I mean, there's just so many things that make your head explode. And you have all this information coming at you at all times that you have to be able to pick out what's important and freaking like the Matrix. Like, it is coming at you 1,000 miles an hour, and you have to be like, whoa, I saw that coming. You got to just know how to do it. And that comes with experience. And like you said, you can tell the difference between someone that has been in there for a minute, or someone that's just like hot off the press and they're just rebuttal master, right? They're going to pivot around your objections, but they're not giving you solution.
Yep. Yeah. And I would say even to take it a step further, it comes with knowledge, right? Which hopefully comes with experience, but also, you could be a well-studied student, so to speak, and 3 weeks into it, have some great, fantastic answers and workarounds that you'd be like, wow, this person must have closed 500 loans already. So, so experience / knowledge. And I think this is something we talked about before too on the show, was like, there's some people that have been in the business 40 years and they don't know anything. And there's people that have been in the business for 40 days and they know a lot. So
yes.
Don't just assume experience. I always love when I say, hey, we've got this issue, and they go like, okay, well, I'll talk to them. I've been in the industry for 32 years and blah, blah, blah. I'm like, well, that has nothing to do with what I'm talking to you about. And it makes me think you don't really actually know what you're doing. And you're trying to make it sound like because you've got all these extra years on me that And it's like, what are we talking about right now? You know, I'm
Oh my
trying to
God,
talk
that's so
about
true.
fixing a problem.
It's so true. Like, it's like people get like, okay, so people are looking for a reason to brag, right? That braggadocious, like you said, it's almost like a deflect, right? So it's like, we'll be like, I'm in the top 5% of real estate agents, so I can got my finger guns out and all that other stuff. And it really that has nothing to do with the solution to the problem. And your years and the amount of volume that you close does not mean that you are really good at your job, right?
Yeah.
Just might have a great support system, right? But maybe you've been so out of it for so long because you've gotten so big that you forget the basics, right? And that's where I was talking about earlier, is like, I will never not show up to someone's house and pick up documents if that's what they're comfortable with. I will never not like be intimately involved with a transaction because that's what I know, right? And you, like you said, like people want to talk about, oh, I've closed this amount and I've done this and I've done that. It's okay. Well, what does that even mean, really, if you don't answer your phone? What does
Yeah.
that even mean if you're not available? What does that even mean to me? That's great, but what does that do for me and my buyer in this situation when we have a water issue in the basement because it's been Hurricane Katrina season around here? Like,
Mhm.
it means nothing, you know?
Yeah. And the thing is too, like most people that actually know their business, they don't ever bring those things up, right? I can guarantee you if I was sitting down with Dan Gilbert talking about mortgages, that he wouldn't say to me, well, I'm the owner of Quicken Loans, of course. You know, it's like he either he would say what he's got to say, or you know what I mean? Like he wouldn't rely on me having to know he's the CEO of the largest mortgage lender in the,
No,
in the
you'd be
state.
like, you see that block down there? Yeah, I own all that. So what were you
Yeah.
saying?
That's it. Yeah, exactly. Yeah. Now, if I told him like you don't know I can think of an example of a guy one time during literally a friendly poker game. We were betting with $20, which is completely legal, and something happened, and this guy is like, he's just a math whiz, right? He's just he always is working with numbers. He could do compound interest in his head, and this thing happened in the game, and the guy goes, "Do you even know how to do math?" And I thought it was hilarious. My friend was ready to punch the other guy because he was so pissed off about it, but I was laughing because I'm like, yeah, he kind of knows how to do math.
Like, you know that bees can smell fear.
Exactly. Yeah, all these random things. Obviously, two of us are blabbermouths and we can talk forever. I know you got to get to work. I've got on my Panthers shirt because Brady's got a game later, so go South Lyon Panthers black. It's actually scrimmage, so it doesn't count, supposedly. But you know, before we what do we disconnect? I guess we don't hang up, right? Before we disconnect, any parting words, anything you got to get out there that we haven't talked about? And of course, if not, then the best way for people to reach you.
Okay, yeah. So the big thing is, in the beginning, our topic was, you know, is it harder for people to get pre-approved? And yes, there was a minute where it was, but there is some reprieve coming down the pipe where they are looking to help, you know, lower income individuals have home ownership, right? That's the goal, is not to give people like the red X, but to really just find ways to qualify people to get bona fide mortgages out, that people that deserve it, because the industry in itself just, you know, feels that everyone should have that dream of home ownership, and they are looking for things to allow that to be a little bit easier. I would also say be a little bit of patience, because everyone is, again, functioning at their highest capacity. So if someone is taking a day or two to do your pre-approval, be thankful that they are actually taking the time to be intimate with your transaction, instead of just slapping a piece of paper at you and then things blow up at the 11th hour. You know, so if someone takes a couple of days, you know, be okay with that. But as long as they're in communication and they're letting you know. And I work for Capital Mortgage Funding. You can always reach me on my cell phone, 734-778-8484. And I'm not the Wizard of Oz, the fake person behind the curtain. I am someone that will answer the phone, and I am accessible to any and all that want to be educated. Whether you choose to use me or not, I have no problem being a sounding board for anyone.
There we go. And that's, you know what I was going to say, one of the things that happens that I smile the most is when I get a phone call or text, and it's not because they want me to talk to them about their house. They're wondering if I know a painter, or they're wondering because they know that I do what I do and I do it at a high level, and they figure, well, he's got to have like, you know, a list. We used to say Rolodex. We need a new name, I guess, but you know, I've got contacts, you know.
Back. Rolodex back, man.
Yeah, bring out the
But
roller
it's old
dice.
as new again.
It'd be great. Check my Instagram today. You'll see this person had an old phone, like from like Crank It and Hello Operator. It's actually kind of cool. But anyways, um, it's that, like you just said, like reach out to you, even if they're not working with you or don't want to work with you or, whatever, like you can be a resource. And that's the biggest thing is like, we are resources. And yes, we get paid by closing deals, loans or transactions or whatever the right term is. But at the end of the day, we love what we do. So while we would love to be actually working with you and have you as our client, we also just want to be able to help. So if you got questions, you can always reach out with a call, a text, an email, whatever you got to do. So
Sure.
awesome. Becky, I'm going to let you go handle your business. I'm going to eat a little dinner and then get off to this old Panthers game right here.
All right. I bring back the big W win.
We'll talk to you soon.
All right. Thank you.